Okay, so get this, right? Imagine J.P. Morgan, way back in 1901, putting together this huge deal with Carnegie Steel.
Mm.
It wasn't called a leverage buyout back then,
All right.
obviously,
Right.
but it had that same kind of like DNA as the private equity deals you hear about all the time these days. It makes you
Yeah.
wonder, how did this whole world of like high finance, how did it get here? And more importantly, I guess, how does it affect, us now?
It really is fascinating to see how these financial strategies, they've been around, honestly, for much longer than people think, often hiding in plain sight.
Totally. And we are going to unpack all of it in this deep dive. It's private equity. That's the world we're looking at. We've got excerpts from that Wikipedia article on private equity,
Mm-hmm.
some really interesting historical stuff, even a few cautionary tales, I think.
Yeah.
How it works, who the players are, and maybe uncover a few surprises along the way. Right.
We're going beyond just the jargon, really trying to understand how it all works, the mechanics, the history, the impact, from those big headlines you see
Yeah.
to how private equity actually influences things like healthcare, for example,
Yeah.
or even, believe it or not, Red Lobster.
Yeah, you heard that right, Red Lobster. We'll get to that
Oh, yeah.
a little bit later. But first, let's set the stage. When we say private equity, what are we actually talking about?
Okay, so at its core, private equity is really just about investing in companies that aren't listed on the stock market.
Right.
Money invested kind of outside those public exchanges, often with the goal of like taking a company private,
Yeah.
improving it, and then eventually selling it for a profit. It's kind of like a treasure hunt, actually. Okay.
You're looking for those undervalued assets.
I like that. I like that analogy, the treasure hunt.
Yeah.
So who are the treasure hunters in this scenario?
The treasure hunters are the private equity firms.
Okay.
They're the ones with the knowledge, the expertise to spot those hidden gems, those companies with untapped potential.
Yeah.
They're the deal makers, the strategists.
So they're like the Indiana Jones of finance.
Yeah,
But instead of whips and fedoras, it's spreadsheets and boardroom meetings.
exactly.
But even Indiana Jones, he needed a crew, right? He needed funding for his adventures.
Oh, absolutely. That's where the investors come in, the limited partners,
Okay.
or LPs for short.
That piece. Got it.
These are the ones providing the capital, the fuel for those treasure hunts. So we're talking big institutions, pension funds, university endowments,
Yeah.
even just really, really wealthy individuals. Anyone,
Yeah.
essentially, looking for those potentially,
Huge returns.
outsized returns, that private equity can offer.
Exactly. They're trusting their money to these firms, betting on their ability to find those undervalued companies, and then, work their magic, turn them into profitable investments.
It sounds like a high-stakes game, with a lot of moving parts.
It is.
But we've been throwing around this term private equity as if it's like one specific thing.
Right.
What are the different strategies? These firms are using, it's got to be more than just buying a company outright.
Right. Oh, absolutely. It's not a one-size-fits-all kind of approach, There are actually several different strategies in private equity. One of the most, I guess, well-known and definitely the most talked about is the leverage buyout, or LBO.
Ah, yes, the LBO.
Yeah,
It's almost synonymous with private equity at this point.
it is.
Just conjures up those images,
Yeah.
Wall Street, the 80s, those high-stakes deals, the corporate raiders, all of that.
Yeah, the LBO definitely has, a certain notoriety, I guess you could say. It was the driving force behind some of the biggest corporate takeovers in history.
Right.
Like, think about RJR Nabisco back in the late 80s. Massive deal. Even by today's standards, I think it was the largest LBO for like over 17 years. But to really understand how an LBO works, let's maybe try to simplify things a bit. Imagine a scenario.
Okay, yeah, walk me through it.
Okay, so let's say there's this private equity firm. We'll call them ABC Capital.
Okay.
And they found this company they believe is undervalued. We'll call them XYZ Industrial.
All right.
XYZ makes widgets. They're a solid company, fundamentally sound,
Okay.
but their stock price, it just doesn't reflect their true potential,
I see.
ABC Capital sees this as their opportunity.
So they're going to swoop in with that leverage buyout. But how does leverage actually work in this case?
That's the key part. ABC Capital, they don't want to use all of their own money to buy XYZ Industrial.
Right.
Instead, they use a combination of some of their own funds.
Okay.
And here's the leverage part, a significant loan from a bank.
Okay, so they're using borrowed money, essentially, to make this purchase.
Exactly.
But what would make a bank willing to loan such a large amount of money for something like that?
Well, this is where it gets really interesting. The loan that ABC Capital takes out, it's secured by the assets of XYZ Industrial, the company they're buying.
Hmm.
It's kind of like, when you take out a mortgage on a house,
Right.
but instead of using your own assets as collateral, you're using the assets of the house itself.
So they're using XYZ's own value to finance the purchase of XYZ.
Exactly.
That is a lot of leverage, hence the name.
Hence the name, precisely. And if everything goes according to plan, ABC Capital, using their expertise
Right.
and that borrowed money, they improve XYZ Industrial's operations, they boost its profitability,
Okay.
and then they sell it, either to another company, maybe through a public offering, but they sell it for a much higher price than they bought it for.
And if that happens, everyone wins.
Yeah.
Right. ABC Capital, the bank that provided the loan,
Right.
and, of course, the LPs, the ones who invested in the fund.
Right. They all get a cut of the profits.
But what happens if things don't go according to plan?
Well, that's the risk with leverage, right? If XYZ doesn't improve, or even worse, if its value declines, ABC Capital is still on the hook for that loan.
Yeah.
It can be a risky game, there's no doubt about that. But the potential rewards, well, they're very enticing.
Yeah, I bet.
That's the trade-off.
That's a great explanation of LBOs, I've got to say. It's like a high-stakes game of chess, but with companies and billions of dollars at play.
That's a good way to put it, yeah.
But I'm guessing leverage buyouts aren't the only strategy in the private equity playbook.
Oh, absolutely not.
Hmm.
LBOs might be the most, let's say, famous,
Right.
but there are other strategies that these firms utilize. For example, there's growth capital.
Okay.
Instead of buying out a company the way you would with an LBO,
Right.
growth capital is more about investing in companies that are already doing well,
Mm-hmm.
but they need kind of an extra push to really scale up,
So think of it like what? Like a company that's already...
Yeah, like a fast-growing tech startup, for example.
Okay.
They've got a great product, solid customer base, but they need capital
Right.
to maybe expand their operations or invest in marketing, maybe even acquire a competitor, things like that.
So it's less about taking a company private. It's more about just fueling the growth of a business that's already, successful.
Exactly. Then you've got mezzanine capital,
Okay.
which can be a bit more complex, I guess. It's kind of a hybrid form of financing,
Great.
somewhere between debt and equity.
Okay, mezzanine capital, so it's like this financial in-between. How does that work in practice?
So let's say a company wants to make a big investment, right? Maybe build a new factory or develop a new product line, something like that.
Okay.
And they've maybe exhausted their traditional bank loan options,
Okay.
and they're not quite ready for a full-on equity investment.
I see.
That's where mezzanine financing can really bridge the gap.
So it gives them that flexibility to pursue these opportunities for growth
Right.
without having to give up too much ownership of the company.
Precisely.
Okay.
And then, of course, we can't forget about venture capital,
Right.
which has become, this major force
Oh, yeah.
in the world of finance and technology especially.
Yeah.
And while it kind of falls under that private equity umbrella,
Mm-hmm.
it really does have its own unique characteristics, I'd say.
Yeah, venture capital, it's almost like a world unto itself in a way.
It really is, yeah.
It's about funding those startups,
Right.
Those early stage companies with the big ideas, maybe even a little bit crazy,
Yeah.
but they have the potential to disrupt
Mm-hmm.
entire industries. I mean, it's high risk,
For sure.
high reward. There's a possibility for huge returns if you get it right.
Oh, absolutely. I mean, think about companies like Google, Amazon, Facebook, right?
Yeah.
They all started as, small startups funded by venture capitalists who, had that vision. They believed in these
Maybe it's worth
founders.
their chance, yeah.
Without venture capital, the tech landscape, it would look radically different today. There's no doubt.
It's amazing to think about the impact of just, those early bets
Yeah,
on companies that went on to, literally change the world.
absolutely.
But kind of going back to private equity as a whole for a second,
Sure.
I'm curious about the history of it. Has it always been this,
That's interesting.
powerful force in the financial world?
Well, private equity, in some form, it's been around
Okay.
for much longer than most people realize.
Really?
Even back in the early 20th century, you had, wealthy families, individuals. They were
Okay.
essentially acting as kind of these proto-private equity investors, if you will.
It's interesting. Providing capital to businesses and entrepreneurs.
So the concept of investing in a private company is not new at all.
No, not at all.
Oh, okay.
But the industry, I'd say, as we know it today,
Mm-hmm.
it really started to take shape in the post-World War II era.
Okay.
So in the 50s, the 60s, you see these first dedicated private equity firms starting to emerge,
Okay.
often started by, maybe former investment bankers
Yeah.
or successful entrepreneurs themselves.
They had that experience.
Exactly. And they saw this opportunity to apply their skills and their capital
To a new area, yeah.
to businesses that weren't quite ready for, the public markets.
So they were like kind of financial pioneers in a way.
That's a great way to put it. Yeah, venturing into this uncharted territory in a sense.
I like it.
And then came the 1980s,
Oh, boy.
the decade that would become, almost synonymous with
Right.
leveraged buyouts, the rise of the corporate
The
raider,
ladies, right? Big hair, shoulder pads.
everything. Yeah.
And even bigger deals. That's when private equity really kind of
Yeah.
exploded into the public consciousness, right?
Oh, absolutely. It was fueled by deregulation.
Mm-hmm.
Junk bonds were a big thing. The economy was booming. The 1980s saw this wave
Yeah.
of LBOs, unlike anything that had come before.
Mm-hmm.
Private equity firms were using, just incredible amounts of leverage
Yeah.
to take over some of the biggest companies in America.
It was the Wild West of Wall Street.
It really was, yeah. Fortunes made and lost practically overnight.
It's true. It sounds exciting, but also, a little bit terrifying, right?
Oh, without a doubt.
Sorry.
It has a heady time, but it definitely had, its excesses and its cautionary tales.
Yeah.
The collapse of Drexel Burnham Lambert,
Yeah.
that investment bank.
Mm.
In 1990, they had played a key role in financing
Right.
many of these LBOs.
Right.
That really kind of marked the end of an era,
Yeah.
and it led to a period of, I don't know if I'd say soul-searching,
Sure.
but definitely retrenchment for the private equity industry.
It's a good reminder, though, right, that even with, the most sophisticated financial strategies, you can't escape
Yep.
those laws of gravity forever.
No. What goes up must come down, as they say.
exactly.
But, the private equity industry, to its credit,
Mm-hmm.
they learned from the mistakes
Yeah.
of the 80s.
Okay.
They adapted. They evolved their strategies.
And so in the 90s and into the 2000s, we see a shift
Okay.
towards, larger deals, more complex deals for sure,
Okay.
but also a greater focus on how can we actually improve these companies? How can we create long-term value?
So it became less about stripping assets and more about building a sustainable business.
Precisely. That's a great way to put it.
Okay.
And that evolution, it's continued really into the 21st century, right?
Right.
Private equity firms are major players now in just about every industry you can think of.
That's true.
Healthcare, technology, energy, consumer goods, you name it.
Yeah, they're everywhere.
But as private equity has grown in size and influence,
Right.
so too has the debate about
Okay.
its role in society.
Yeah, and that's an important point.
Yeah.
It's one thing to talk about, LBOs and growth capital,
Right.
but it's another to really consider how these strategies actually impact the real world,
Absolutely.
the lives of everyday people.
Exactly.
And that's something that we're gonna explore after the break. So we started in the early days of this whole private equity world, and we've made it to LBOs, venture capital, all that. But it's not just it's not just financial statements. It's not just deals happening.
Right.
It's about how does this world, a world that most people find kind of mysterious, right?
Yeah, definitely.
How does it actually affect our lives?
Absolutely. It's easy to think about private equity as something, way over there.
Totally.
Something that only involves, Wall Street, those big investors.
Yeah.
But the reality is the impact is felt way beyond
Yeah.
just the financial markets.
Yeah, we're not just talking about the headlines, the mergers, all that.
Mm-hmm.
We're talking about things that affect people every day. You mentioned healthcare earlier.
Right.
Private equity's been investing more and more in healthcare providers. What does that actually mean for the average person?
Well, it's tricky, right? It's not a simple, good or bad situation.
Right.
On the one hand, private equity, it can bring in much needed capital
Okay.
to the healthcare system, which, let's face it, struggles with rising costs all the time.
Mm-hmm.
It can mean more modern facilities, better technology,
Right.
maybe even better access to care for some people.
Okay, so that sounds, potentially good.
Right. So where's the catch?
Yeah, exactly. What's the downside?
Well, private equity firms, just like any business, they're driven by, the need to make money for their investors.
Of course, yeah.
And that can sometimes clash with the goal of just providing affordable, good health care to everyone.
Right, because at the end of the day, there are businesses looking for that return.
Exactly. And there's this growing concern that when private equity gets involved in healthcare, that profit motive
Yeah.
starts to overshadow patient care.
And there's been some research on this, right?
There has, yeah, and some of it's pretty concerning. There have been studies showing that, nursing homes, for example,
Right.
when they're owned by private equity firms, they tend to have higher mortality rates
Wow.
and lower staffing levels compared to ones that are, nonprofits or even government-run.
That's a big deal.
Now, it's important to remember, just because there's a connection doesn't mean it's the cause, right?
Right.
There are other factors at play, but it definitely raises some serious questions.
It really does make you think about the incentives when your healthcare provider is beholden to, investors.
Absolutely. And it's not just healthcare either. Remember our Red Lobster saga.
Ah, Red Lobster, the shining beacon of Cheddar Bay biscuits.
Exactly.
How could I forget?
Well, it's actually a really good example of this, the impact private equity can have.
Okay.
So back in 2014, Red Lobster gets acquired by a private equity firm.
Go on.
They load the company up with debt.
Okay.
They sell off some of its real estate in a sale leaseback, which is, a whole other thing.
Right, right.
But basically, the company, it's struggling to stay afloat.
Wow. So what seems like just a business deal, up in the world of high finance,
Right.
ends up impacting, a whole restaurant chain.
Yeah.
Maybe even the fate of those, iconic Cheddar Bay biscuits.
Exactly. Exactly. And it really underscores this whole debate
Yeah.
about private equity, about whether it's really creating value
Yay.
or just extracting it.
This is the whole, wealth capture versus wealth creation argument, right?
Exactly.
Where some people say, look, private equity, especially those big leverage buyouts, it's just financial engineering. It's not about building something that lasts.
You got it. And the critics, they point to these cases where these firms, they saddle companies with all this debt,
Right.
strip the assets, jobs get cut, and then they sell it off for a profit.
Right. And the company's left to kind of pick up the pieces.
Exactly. And the people who work there and the customers, they're all affected.
It sounds like there's no easy answer here.
There really isn't.
It's clear that private equity, it can provide capital.
Yeah.
It can bring in expertise. It can help businesses grow, when it's done right.
For sure.
But there's also that potential downside where the pursuit of those profits can come at a cost, whether it's jobs, wages, or even just the quality of, the things we rely on.
It's a real dilemma, and honestly, there are valid points on both sides.
Yeah.
But here's the thing to keep in mind. Private equity is only getting bigger. Its influence is growing.
Right.
This debate, it's not going away. And it's not just about money. It's bigger than that.
It's a bigger conversation about the role of capital in society. The balance of power. What kind of economy are we even trying to build?
Couldn't have said it better myself.
Yeah. It's about recognizing that private equity, it's not just this, neutral tool. It's a force that shapes industries,
For sure.
communities, lives.
Absolutely.
And it's really up to all of us, I think, to make sure it's used responsibly.
Well said. Policymakers, investors, even just consumers, we all have a role to play.
That's a powerful message for us to end on.
It is.
As we've seen,
Yeah.
private equity, it's a complex world.
Yeah, for sure.
Full of contradictions. It's got the potential for good, but also, the potential for harm.
Absolutely.
The more we understand about it, the better equipped we are to, I guess, shape how it evolves.
Yeah. Exactly. And maybe the next time you hear about some big company being taken private, or you see that little PE-backed label.
Yeah, like you said, it's everywhere.
It is. You'll think twice, maybe ask some questions about what it really means.
That's the story behind the story. Right?
Exactly.
I like it. Well, thanks for joining me on this deep dive into the world of private equity. It's been enlightening.
My pleasure. Always happy to chat about this stuff.
And for everyone listening, until next time.